Well, hello everybody, this is Jason Wink, and today is Friday, September 30, the end of September. Markets are now closed. It's nearly 5 o'clock p.m. Just wanted to record a quick update. I haven't had any this week. It's been a bit of a busy week because I'm getting ready to take a week off and enjoy my wedding anniversary with my wife. So I probably will not post next week, though over the weekend I will be writing our full third quarter commentary, and not only will we send that out to all of our clients, but I'll also post a copy on the blog probably sometime next week. Just to recap as far as what's happened, since I last recorded a video, the market has dropped down further. What you see right here is from Google Finance, and this just gives a recap to what different major equity market indexes have done on a year-to-date basis. So what you see here, the blue is the S&P 500. It's down now a little over 10% year to date. But as I've said a number of times before, it only tells really a part of the story. Most people, if they're investing in the stock market, they have hopefully a broadly diversified portfolio. And if they do, that means they also have medium-sized stocks as well as small company stocks as well as international stocks as part of their stock portfolio. And we'll see that the red here is mid-cap stocks. They're down almost 14%. Small company stocks about 18%. International developed markets, so those would be like a Germany, for example, or other developed parts of the Euro world, Canada, places like that, down about 18%. And then emerging market stocks are down 26.33% year to date. So it's been a very brutal year, especially after a lot of these indices were up around 10% just 3 months ago. In fact, even the first week of July. So that's what's happened in the last few months, as well as just a recap since our last week. Now, other little thing I wanted to point out, I've shown this chart a few times here, and I'm just going to get it into the right zone so everybody can see it. Okay, and scroll down a bit. So this is the one where I've shown and I called it, sort of somewhat of a relatively simple mechanism for finding the long-term trend in the market. And since it's designed to only look at the S&P 500 and look at it just once per month, I've mentioned a number of times that we had to wait till the end of the month to see if this turns out to be another sort of sell signal. That's when these red bars have been on this chart. And as I suspected, though it didn't in a major way pull off a sell signal, it certainly has pulled off a sell signal. So when I update this in the future, you'll see a red bar there, and we'll see if this red bar turns out to be the same type of warning that warned of the 2008 market collapse, as well as the 2000 through 2003 market collapse. As I mentioned also, it has had a couple of false signals, like we saw in late 2006, as well as late in 2008, though those in the past, within 2 or 3 months, have then triggered the green bar, sort of the buy signal, if you will. So this isn't meant to be a recommendation, just a good warning that even something like this group of indicators, which has been pretty accurate the last 15 years, is not perfect. And while it will still, when it does give the sell signal, still take the first initial part of a drop, what it's designed to do is catch the really major sort of catastrophic drops, the ones that are 30, 40, 50%. And so seeing a drop of 10 or 15% from a market high isn't typically a cause for long-term concern. It's the ones where people lose 30, 40, or 50 that we really have to be careful of. So that's what this one is saying. For those who are clients wondering about our portfolios, we have less than half of our stock portions invested. In fact, probably only if a client was in a 60-40 mix of stocks to bonds, we're at this point more like 20% stocks, and our bonds are fairly allocated, but we do have a lot of cash. So we've gotten quite defensive, and we've been doing that for over a month. In fact, we've been doing a lot of the defensive positions since early in the year, in April and March and May. So we haven't experienced nearly the drop here as of late, but we're also trying to prep up for what may come in the future, and our modeling is suggestive of perhaps further declines in the future. One other chart to just mention, because I've talked about it in past videos, I've shown this one of gold a few times, and I know a lot of people were kind of piling on the gold bandwagon. We can see that gold, this is the price here in the middle, it hit its high, got close to $2,000 an ounce in late August, and I kept warning that I thought it could go down to $1,550 or $1,600 an ounce, and sure enough, that's roughly where it is today, right around $1,600 or thereabouts per ounce, so a pretty big drop. Now the good news is the uptrend, if you will, is still fully in place in gold. It simply got too hot too quickly, and I'm not sure if it'll drop significantly from where it is now, though I don't think now is maybe the best time to pile in. We need to make sure this uptrend resumes, and the only way we'll know that is if gold stabilizes here and then maybe starts to trend slightly upward back into maybe 1650 or thereabouts. That would be, a positive sign long term for gold. But if it does drop, I think it could go as far as maybe 1400 an ounce. If it gets to that point, I would speculate that's a great opportunity to buy. I know our models that track gold had sold it roughly 2 months ago, so we missed the very last bit of the upside, but we also missed all of the downside. And the net impact is that we were able to lock in our gains for the year without having any of this pain here to the downside that's happened recently. So that's my quick update for this week. Again, I'll have more coming, though I will be on vacation again. I'll have my commentary published likely over the weekend, and that'll give some, both feedback on what's happened the last 3 months, but also give everybody an idea what we're looking for towards the end of the year. Thanks a lot for checking this out. As always, if you like this video, you think there's some good information in here, feel welcome to forward it on to people that you know might benefit. And stay tuned. I'll be back in roughly a week. Thanks again. Have a wonderful weekend.